Welcome to the Savvy Property Investors Podcast, a weekly show that delivers the best hard-hitting property industry news, business advice, and talks that will get you ascending in the real estate industry. Now, here's your host, the amazing award-winning property and business coach, best-selling author, and serial entrepreneur, Miss Sapphire Gray.
Welcome to another Property Investors Show. Our guest this week is Cally Godfrey. She is sharing with us how to get started as a property investor. Cally Godfrey is a modern-day marketing powerhouse and head of the marketing team at the leading UK property development Sevens Capital. Cally manages the marketing channels for the property portfolio worth over 2.1 billion to investors across 3 continents. Cally expertly oversees the maintenance, execution, and involvement of multiple marketing channels, as well as leading a global marketing strategy at Sevens Capital. From conceptualizing and building company-wide campaigns, insight analysis, and digital strategy, to overseeing a team of creative and the creative bespoke insight leading marketing, driving the results for the company and clients. Cally has a vast depth of industry knowledge with a range of qualifications like her degree in management and French, as well as CIM and IDM certifications in digital strategy and email marketing. Cally has spent over the last 5 years fine-tuning her interchangeable skills. I am Sapphire Gray, your host, so let's get started. Cally, thank you so much for joining me today. I see you've got a plethora of skills and knowledge to share with our audience, so welcome again.
Thank you for having me. I'm good, thank you.
Excellent. So I'm going to kick off our questions today. Is what are the key traits of a person that needs to build a large portfolio, say 30 plus properties?
So I think, it's important to note that investors come in all shapes and sizes and from all different backgrounds. But there's a few things that people kind of do need to consider before they start to think about investing on that scale, especially. So I think one of the first things, that an investor has to decide is, are they going to have the property business as their main business? Is that going to be the full-time job? Or is it going to be something they want to do on the side? And obviously that's going to massively impact how they choose to manage their portfolio, whether they're going to use letting agents, whether they're going to be really hands-on or hands-off. So that's one of the first things. I think the other thing that's really important is research and planning. So you've got to be a planner. You've got to know what your goals are and really, really want to aim for them. So planning, are you doing it for retirement? Do you want income? Is it something that's short term or long term for you? And how are you going to leverage what you currently have to actually gain those 30 properties? How are you going to get funding? Are you going to use mortgages? What have you got to start with? So there's a lot of things to consider, but most of the time the people that have got these 30 plus portfolios have got a long-term strategy. And I think that's probably the most important thing.
Excellent. I totally agree with that. And it's all about doing your due diligence and knowing where you're starting from. And hence Absolutely. Why I always say to people, start out with a plan first on why you want to build out a portfolio. What is your reason behind it? Because that way it then gives them more ground and more a level to start off on a firm ground footing to get into investments once they understand why they're actually doing it. Excellent. Thank you for that. Can you detail some of the responsibilities you have taken on if you were to be a landlord?
Yeah, so obviously once you become a landlord, you become responsible for quite a few things, both legally and costs. So just looking at the costs first, a lot of people will be taking on a buy-to-let mortgage. So obviously you need to be prepared to pay that. If you have voids or anything, you've got to have a plan in place for that. You need to decide whether you're hands-on or hands-off, as I've just said. That you've got to decide on that strategy so that you know who you need to appoint partner-wise, because you're going to have to build up that network. You're going to have then letting agent fees to be responsible for. So that's going to be a percentage of your rental income. You're going to be responsible for the maintenance of your property. So whether that be an apartment, a house, you've got to keep it in a good standard for people to live in. And then a lot of landlords will take on some form of insurance as well, just to cover them in case of emergency or anything happening. And then from a legal point of view, you've got to have a tenancy agreement in place with your tenant, and their deposit will always have to be placed in a deposit protection scheme. A lot of this, if you do appoint a letting agent, will be kind of covered by them. So obviously what the cost is for, and they will also often find you a tenant, so there'll be a tenant finding fee there as well. But then on the other hand, you know, you've got energy performance certificates. You've got to make sure that's all up to date, and all your safety standards as well. So gas, fire, and electrical safety certificates.
Absolutely, because I know that that's been at the forefront of any landlords, is to make sure those certificates are in place. And if you're doing HMO, to make sure you're licensed properly as well. So there is a big responsibility you have to take on, and to become a really responsible landlord, you really have to do your due diligence and making sure that you are compliant, not only for yourself, but for the safety of your tenants as well.
Yeah, absolutely.
Brilliant. Can you explain to our audience, a lot of the time when people are working out and looking at properties, they're thinking, oh yeah, this is a good find and this is a good buy. But what is rental yields, and how is that kind of calculated? What's that based around?
So rental yield is a metric that's often used by landlords to kind of demonstrate the return on investment. So it's only one of the ways that you can do that, really. And it's really important to remember, I think, that that's not the only thing. That's not the only way you're going to generate returns. So just covering rental yields are calculated by dividing your total rental income per year. So say you've got £1,000 per month rent, that's £12,000 per year, dividing that by the purchase price of your property. So, for example, if you have the £12,000 a year income and a £250,000 property, you'd be getting a 4.8% net gross rental yield. So that is everything. But then you have to factor into that you know, there's going to be a net version of that. So a lot of when you're calculating that, you need to keep in mind your service charge, your ground rent, any letting fees. And what you should do is take that out of your total per year to calculate your net return. So it's important to remember to do that to actually generate, you know, your real income rather than the gross income.
Yeah.
The other thing that I think a lot of investors do focus heavily on rental income, on rental yield, which obviously is a really important aspect. But you do need to also think about capital growth. So especially in an off-plan property, capital growth is a huge part of the return that you're going to make. So let's say an area is projected to get 4% capital growth per year, which a lot of the Midlands, West and East are projecting at the moment, that can equate to like £10,000 a year on that property, on that £250,000 property we've just spoke about, which is another £833 per month. And yes, that's not money in your pocket, but it's still a return, and you do need to keep that in mind when you're choosing the area to invest in.
That's brilliant. And that leads us nicely into understanding what is service charges, because I know Seven Capital does a lot of apartments and flats, and a lot of the things that people always are fearful of when they're getting into some types of investment, oh, it's going to have service charges, it's going to have ground rent. So can you explain that there's nothing to fear having a service charge on you know, buying investments?
Yeah, so service charge is completely normal, especially with apartments. As you said, a lot of our developments are apartments, and you will expect to pay a service charge on those. And all that covers is, so it's to basically keep the building maintained. So it's the insurance that the freeholder may need, it's maintenance, it's if you've got communal areas, you don't want them starting to look scruffy, you want to keep them up to scratch, and that's what your service charge covers. And as I say, you will pay that at most, you know, leasehold or apartment developments. As I say, it's important to just factor that into your net yield when you're calculating that. But the other thing to keep in mind is, you know, the changes that we've seen over the last 12 months, especially, people are putting more of a focus on amenities, on outdoor spaces. And yes, you will pay more of a service charge here, but you can ask for more rent, because that's what, you know, those properties are in demand. So yes, you have to pay it, but it's not a bad thing. You want your building to be, you know, kept nice and attractive for tenants.
You're basically saying that you can offset it on the rent, because if people have got the gardens, communal gardens, and got different amenities that come with the service charge, at least they don't have to take care of that. At least they don't have to take care of the building and the structure that's been taken care of for them. And it is just offset that, making sure that you manage that and calculate that within your cost.
Yeah.
Another thing it brings me to is the ground rent as well. Can you explain a bit about ground rents?
So ground rent is paid when you've got a leasehold property. A freeholder will own the building usually, and it's just a rent that you pay to them for ground per year. I think it's usually paid out. Sometimes they can arrange monthly, but it's usually an annual payment. It's a completely normal thing. One of the things that I would say with ground rent is just make sure that when you are signing contracts or purchasing an apartment that you know what the conditions of the ground rent are, because there have been cases in the past where it can be an increase in ground rent, which obviously you need to factor in. The government have got a lot more strict with the rules of ground rent recently, and in the future I think there's been some changes that are going to move it to more of a European model. So actually a lot of places, a lot of new builds will only be able to ask for a peppercorn ground rent, it's called. So I think it's £1 a year to protect people that obviously own and rent apartments. So it's just one to keep in mind and just one to check when you are investing.
Yeah, and it's always wise to check with it, as you said, read the contracts, make sure that you are legally savvy on doing that. And your solicitor should be able to inform you of what the ground rents are, alongside the service charges as well. So that's brilliant information you shared. So join us after the break, where we bring more insights from Cally. Welcome back, and thank you, Cally. So far, the first part of our talk or quick Q&A has been insightful. I'm sure our listeners are enjoying what you are sharing. So another question we have for you: what are the 4 foundations of building a property empire?
So we published a guide a few months ago. It's been really popular with our investors that covers this. So we've kind of split it down into, as you say, the 4 foundations. So the first one we look at is starting, obviously the logical place to start. So that is what we spoke about earlier. It's setting your goals, deciding on your strategy. Are you doing this? Are you aiming to do it for 10 years? Are you wanting to flip? How are you best going to do that? Do you want to set up a retirement fund? Are you doing it for inheritance? You need to know your goals. Then you're looking at your strategy. So what types of investment are you going to look at? Are you looking at 1 beds, 2 beds? Are you looking at apartments, houses? Are you going to go for off-plan? Do you want something ready-made? There's a lot of decisions to make at that point, and that's where you should be doing the most research as well. So make sure you know the markets that you're looking to invest in. Make sure you know how much money you've got to spend. It's all about preparation. Fail to prepare, prepare to fail. So just make sure at that stage that's where you're at. Your second step is scale. So once you've got that first property or first 2 properties, you've kind of got to keep your security and your safety in mind. So, we mentioned earlier, you may have voids. It's likely that you will at some point have a void. What are you going to do if you have voids on 3 properties? Have you got a rainy day fund that's going to be able to cover that? Don't scale past your means. Make sure that you're scaling, within the money that you've got available, and that you've got some spare just in case of emergencies. Something could happen at one of the apartments that you've got, or the houses, and you might have to do a repair. So you just need to be prepared at that point as you scale up. You may also want to think then about leveraging what you currently have. So when we're talking about scaling, you might have some equity in one of the investments that you've already got. So you could take that out and remortgage. So it's all about sort of getting your strategy going at that stage. Third stage we're looking at is sustaining. So at this stage, really, you want to have a really good, especially if you're going for a lot of properties, you're probably going to have some partners that you'll rely on. So making sure that you've got a reliable letting agent, making sure that the developers that you're buying from have got a really good track record and are reliable and are going to complete, and you're going to be able to, they've got everything they need from, safety and security point of view. And I think one of the key bits here is not to panic. So I think a lot of the time, markets going up and down is scary. You see in the news all the time, there's going to be a huge drop in prices. But as with any investment, it's a cycle. You've got to kind of, especially if you're looking at a long-term investment, you need to be prepared to hold potentially through those times. So as long as you've got the means to do that, you kind of need to be patient, basically. And then finally, sell. So this isn't actually for everyone. It might be that you're building your 15 property portfolio to actually pass on as inheritance, or you just want it as income throughout your retirement. But if you are looking to sell, in advance, make sure you've got an exit strategy. Don't just decide one day that you're going to sell. Again, don't panic and decide it when you see that there's a drop. There will be taxes to pay when you sell. So there's capital gains tax. If you're looking at inheritance, there's inheritance tax. So make sure you seek the advice that you need before you make that strategy.
I think all of these pillars just goes to speak on how Seven Capital actually works around with their clients as well. And I've I really admire the pillars that you've built here, because it really does give a stepping stone for a newbie investor, a seasoned investor, or someone looking to also exit, as you said, out of their portfolio, in looking at how do you do this, but do it strategically and what they need to do at each stage. So I think the 4 pillars are really good. I really liked reading it myself as well.
Like what you hear so far? Make sure you never miss a show by clicking the subscribe button below. Our podcast is only made possible by great listeners like you.
Yeah. So how can someone start a property portfolio if they are a newbie with no money?
That's the big question, isn't it? I'd love to say that you can start with nothing, but there's always going to be some entry. One of the things that we're kind of referring to there is leveraging, as I mentioned earlier. So if you have a property that you live in, for example, if you have some equity within that, then you might be able to release some of that to sort of get a buy-to-let mortgage and start your portfolio off. And that's the same as you go down the line as well. So each time you get one, you can obviously use that equity. So that's one way to get in if you're asset rich and cash poor. Another way to do it, so there's things called REITs, so it's a real estate investment trust. So it's kind of like if you invest in the stock market and you invest in like a fund. So it will be like a collection of properties that's managed by that is like a fund manager will manage that, and then the returns will be distributed between the investors. So it's a good way to get into it, but there will be sort of lower returns on that in general. And it's the same sort of thing with a kind of crowdfunding platform. So people may group together and kind of share the returns or share the growth. So there is that way to do it if you're wanting a really low entry level. The other thing I think it's important to mention here, the portfolio is the dream, but for someone who has that dream and is right at the start and hasn't bought a property yet for themselves, I think looking at government schemes, so like Help to Buy, the 5% mortgages that are there now, get yourself onto the property ladder with something like that, and then you'll have this equity hopefully in a few years' time to start your portfolio. So if you start thinking in that way early, then you'll get a bit of a head start on it.
Yeah, absolutely. I was reading an article the other day that Barclays was offering where your relatives could invest in you in the property, and I thought that was a really good product that they have, that they can invest in you, and then you can buy somewhere, they own a share in it, and then in 5 years' time you repay them, they have nothing to do with it, and you own the asset. So I think that's a good stepping stone. And what a lot of it newbie investors don't realize, that when you're getting into a space to invest, lenders generally want you to be a home buyer in a first instance, rather than an investor. There is some lenders out there that would lend on that your first investment is for investing, renting out purposes. But majority do want to see that you have actually bought a residential property first. And there's a lot of schemes out there with the no money down. I'm glad you've explained it in the way that you have, because that's what I teach. Buy one, release the equity out of that, then do it again, and take it slowly. There's no hurry to building out your portfolio. And that's what I love teaching about, because I don't want people to just jump into something and it's not safe, and then risking everything that you have to build out something quickly without actually knowing what you're actually doing. So brilliant advice there. So how can someone with limited knowledge of the digital marketing realm get started advertising their properties and getting into that space through marketing?
So there's obviously a few levels to this, really. So I think, as we spoke about, you could be a hands-on landlord, and if you want to do that, you might do all the marketing yourself, and there are ways to do that now. There's platforms like Gumtree, Facebook Marketplace, even there's people advertise rental properties on those platforms, and if you really are going it on your own, then there are obviously ways to do that. I think it's always really important, and it's quite basic really, but have really high resolution images. Make sure that you're talking about everything, every feature that apartment has or property has, because it will be important to someone. I think it's always really important to keep your audience in mind. So if you're renting a city centre property, chances are that a lot of the time that is going to be younger people potentially. Are you going to list kind of what's around, what the close amenities are, what the close businesses are, all of these things. Just always think about who you're trying to appeal to. If you're talking, about a family in a larger house, then maybe you want to talk about the space, the garden, the kind of schools in the area. There's so many things that are going to appeal to different audiences. From an estate agent point of view, so if you're going to kind of appoint a letting agent to do the marketing for you. I think it's really important to look at how they market as well. So what portals are they on? How are they marketing other properties? What input are you going to have? And also, like, what tools do they have? So a lot of agents now will have kind of VR tours, videos, they'll have their photographers going in. So make sure that you get a really good partner there if you are looking to go through an agent, because that will help you and avoid voids and make sure you get a good tenant.
Yeah, I've also seen an advert today for drones, and I thought that was excellent. That it's now affordable to get a drone to actually look over your property. Yeah. Wow, they're really going far now. Becoming very creative in the digital marketing space is really good. I mean, when I go onto Seven Capital's website, it's the pictures that jump out at me. It's how you presented it. It's straight away you're invited into looking at what is behind that kind of picture. You want more details on it, and I think that you've really positioned yourself well in the marketing field, because when I look at it, it draws me in, and I want to look at more, and then it stops me from doing my actual work.
I'm glad it's working.
Yeah, it's definitely working. So I'm going around and I'm looking at it and I'm thinking this is really good, and if people can draw on that when you're starting out, obviously you ain't got a marketing budget, you probably have a large marketing budget, but it's on similar paths. I mean, our phones itself can take really good pictures, and it's affordable places out there that can do digital walkthroughs for you as well. So look at investing in what you've got to rent out. People will be drawn into that. I remember I done a marketing, it wasn't even a marketing, I was actually testing Instagram on some pictures, and everyone was saying, "Oh, where's this apartment?" And I was thinking, "Where's this apartment? It's just a picture." So I'm testing how to do Instagram, and because I displayed it well, the feedback was well. So yeah, definitely when you're marketing, look at how you market and who you're trying to attract as well, which Absolutely. I think is really good. So what is a hands-off investor, and what are some of the pros of being this type of investor?
So we would really define a hands-off investor as someone who doesn't really want massive involvement in the actual hands-on stuff, really. So this is where your partners come into play. As I say, appointing a really good letting agent who will be able to find your tenant for you. What we offer at Seven Capital, it's one of our kind of USPs, is that we have this customer service team that will look after our clients from end to end. So, we don't just sell and then it's gone. When we sell, because we sell a lot of off-plan products, it might be 2 years before that's completed. So, you're putting your money down on something that's not actually there yet. So for people to do that, there's a big confidence play there. So making sure that everyone's updated. So giving them that service, and then being able to kind of provide a panel of lawyers, a panel of letting agents, and they can just choose those. And, we kind of do the work for them. They then get handed over there, and it's all hands off. So it's minimal effort. The only thing that you do need to kind of be on top of with hands off is making sure that you have good communication channels with your partners. So with the developers, with your agents, and just make sure that you keep those open, because there will obviously be some communication there, but they'll do the bulk of the work. And one of the other pros for it is that we sell to quite a lot of overseas investors. So, it's kind of not really a choice there. It's kind of an arm's length option. So when you're overseas, you want the confidence that your property is being managed properly over here. So yeah, there's a benefit there if you are either far away or you do want to keep it at arm's length. Say, for example, you've got a busy day job and you don't have time to do all that, but you want to invest and you want to see your investments grow.
And I think that's the key. One of the key words that I picked out from that is having good communication in anything, and customer service is integral to any business. Once you have good customer service, not only does it help you with your current customers, future customers as well, because word of mouth, reputation speaks volumes. Exactly. So once you have people think, what, this is a company that I want to, I don't mind sitting down for 2 years, because the way they react to our customer needs and treat us as customers, they are really efficient, and that's how you get referrals and recommendations. So yeah, that's excellent. Exactly. So our last question is, what would you look for or measure when you're trying to identify a good growth in potential investment areas?
Yeah, so I mean, we look a lot at potential emerging hotspots. So we all know London, we all know Manchester, Birmingham's obviously becoming more prolific now as well. But where, we know that especially London, it's hit a bit of a growth ceiling. Yes, the growth's still happening, but it is much slower. So where do you go to get that growth and that capital growth that we spoke about earlier? So one of the things, well, a few of the things that we look out for in a new investment location, have a look what businesses are moving there or are based there. So one of the places that we've been selling in recently is Bracknell. And Bracknell is home to what they call the Silicon Valley of the UK. So it's basically the tech capital of the UK. There's loads of big tech businesses there, like HP, Dell, some massive businesses there. And you know then that the tenant demand is going to be there because the people are working for those businesses. And I suppose a good example here is Birmingham. So Goldman Sachs are moving to Birmingham. If you know that businesses like that are choosing to move to these locations, you know that there's definitely some potential there. Another thing is regeneration. So we always try to pick locations that are going through big regeneration programs because there's so many plans for the future, and regeneration tends to mean price growth. So again, I mean, we've looked at properties in Slough, which is going through a big project with Crossrail. They've had a huge investment into the town centre. The price growth has been, I think it was like 30% in the 10 years before Crossrail. It's huge. And the same for Birmingham. Birmingham's a little bit later on in that, but over the last 10 years, so much has happened. I'm based here. So much has happened here that it's, price growth has been incredible. So pick places that are early on in that process where you can.
Yeah.
Touched on transport links. So some big examples, Crossrail, obviously linking London with the London commuter belt, HS2, although it's a while away yet. That's going to shorten the link between London and a lot of big cities. So, that will affect prices because the access to London will be better. On the whole, it's all about tenant demand. Why do people want to live there? Why do people want to move there? And if you've got reasons for that, then that should give you the kind of indication of whether it's a good spot to invest.
Yeah, brilliant. I always say when it comes to, it's always about, when we go back to our first question that I asked you, is about doing the homework. It is about planning, and part of that planning is looking at where the hotspots, where are the growth areas, where's the regenerated areas that are up and coming. And normally you can get these kind of information off the website as well. Of any local authority's website. Are they planning any regenerations, and where, and what is happening? That's where you can see the potential opportunities to get in on the ground floor now. I do a lot of in the news updates of where's the most popular areas. North, east is coming up. I know Bracknell well. Used to do a lot of service accommodation down there myself. For the HPs and people coming in, flying in, it was really busy back then. So it's an opportunity to buy properties there. And if you've got apartments, it's even better that you could do probably a service accommodation, short lets in your apartment. So that's a good opportunity for investors as well. So Cally, how can our listeners contact you and learn more about the services that you offer?
So best place to go is our website, so www.7capital.com. You'll find loads of information on there about all of the locations that we are developing in at the moment. There's a load of useful guides on there. I referred to the How to Build Your Empire one earlier, so feel free to go over there and download. And there's a few tools on there as well that might be able to help you kind of calculate your potential yields on your investment. Please visit the website or get in contact if you need any more information.
And is there any parting thoughts or comments you'd like to leave our listeners?
I think maybe always think of the tenant when you're investing. The tenant is the heart of your investment. So if you can't get a tenant in there, then that's going to harm you from the start. So always keep them at the centre. Brilliant.
So come on, savvy investors. Thank you for listening today. Let's take flight. Don't forget to subscribe, rate, review, and download and share our weekly podcast. This was brought to you by the Savvy Property Investor Show. I'll see you all next week. Thanks for being here.
This week's episode of the Savvy Property Investors Podcast was brought to you by our sponsor, Savvy Women Group. Thank you for tuning in. If you enjoyed today's show, head over to our website, www.savvywomen.co.uk, to gain access to our free resources and more insights about our guest speaker today. Remember, we make your business our business, so you can unlock your full potential and improve your quality of life.